Bloomberg Audio Studios. Podcasts, radio, news.
Turning to the travel industry, Hyatt reinstating its full-year guidance after its second quarter earnings beat estimates. Bloomberg's Dani Berger joins us now with a special guest. Dani.
Lisa, thank you so much. It is such an important earnings season for just that, understanding the consumer and their sensitivity to this economy. I'm pleased to say joining us now is someone who understands the consumer very well. It is Mark Hoplamazian, the CEO and president of Hyatt. Mark, thank you so much for joining this morning. You were out with earnings moments ago. Earlier this year, you had to cut earnings because of your outlook on some of the weaker reservation trends going forward. You've mostly held on to that look. So what, if anything, has changed for the consumer and the demand you're seeing?
Well, Dani, first of all, thanks for having me. The first point that I have to make is that travel is extraordinarily resilient. It's become a necessity for both leisure travelers and for business travelers. The second quarter was a weaker quarter for business travel, but leisure held up really, really strongly. And our U.S. resorts were up mid-single digits for the first half of the year. Europe was up almost 7% in leisure. So it's leisure, especially in the luxury segments, which luxury has been up about 6 or 7% year to date as well. The higher end customer, which is our core customer base with 70% of our portfolio in luxury and full service, is alive and well. So I would say a couple of things have happened right now. The first is that our largest corporate customers have told us they're going to lean in and continue to travel. And they're making more commitments, especially for customer facing events and meetings. The second thing that happened is that we saw bookings for 2026 really improve for big group meetings. And third, the Conference Board and the Business Council released their CEO sentiment survey this morning, and things have turned. Now tariffs and volatility have declined to number 3 on the list from number 1. And their outlook with respect to potential recession has dropped dramatically. So I think the attitude and mindset for a lot of CEOs is shifting.
Mark, that's very fascinating because the tariff picture is still evolving as we go on. So are there any pockets where you're still seeing those fears of economic anxiety? Or to your point, is it now confidence restored?
No, we are. And in a word, it's China. The caution and conservatism in China is clear, and a lot of people are uncertain about what a so-called tariff war or the tariff picture might do to the economy overall. There's an increasing, I think, body of thought that says that Beijing pays a lot of attention to sentiment. And the sentiment is definitely one of very significant caution right now. So I think there's an expectation that sometime in the fall, there may be policy shifts that alleviate some of that and bring back a stimulus for growth. So I would say,
if I could just jump in, because I wanted to get to luxury, because you mentioned that this is one of the strong suits and really resilient. Of course, you've doubled down on the luxury strategy too. But it is a time where there is more competition, and maybe that aspirational traveler needs a little bit more convincing that they should be paying up for the 1,000 plus a night type of all-inclusive resort. So what do you need to do in terms of strategy to convince them that paying up is worth it?
Well, our all-inclusive business is up 6 or 7% year to date, 8% if you include Europe. It's been wildly resilient. We are the leader in 5-star luxury all-inclusive resorts. I think the certainty of what your vacation will cost you and the experience on property where our colleagues are not thinking about or engaged in how much something costs, but rather full-on human-to-human service makes a difference to people. And so the format is really, really proven to be very, very popular and will continue to do so. We just closed on the acquisition of Playa Hotels and Resorts, 2,600 new hotel rooms in premier beachfront locations. And we have a deal to sell all the real estate, so we will maintain our asset-light status. It's a great deal and adds $65 million in new fees to our run rate. So I think we're quite pleased with that. So we're definitely doubling down on luxury, and we're definitely doubling down on all-inclusive.
Well, Mark, just to that point, it's been a really hot summer, a really hectic summer. I think a lot of people are looking for inspiration of where to travel right now. Where is the most demand? Where are you seeing most people go to? What's in fashion right now?
Yeah, I would say the U.S. traveler has headed to Europe this summer. We thought we would see a massive decline from last year, given the Olympics and Taylor Swift, but they're back in Europe, and Europeans are staying in Europe. But I would say the diversity of destinations has increased a lot of interest in Central and South America. And the Caribbean and Mexico continues to be in great demand, both amongst Europeans, and the Canadian volume into our Mexican and Caribbean resorts is significantly above last year. A lot of people have talked about the flyover effect, where Canadians are heading over the U.S. to get to Mexican and Caribbean destinations, and we're seeing it significantly.
All right, so Europe staying in Europe, Canadians skipping over the U.S., definitely a trend there. Mark, thank you so much for joining us this morning. Mark Hoplamazian, the CEO of Hyatt.